Hi friends, in this video we are going to learn about Companies Amendment Act 2017, which is a very hot and important topic for RBI Grade B and NABARD Grade A and Grade B examination. So let's start. Let's start by looking at the relevance of this topic with respect to RBI and NABARD examination. So this topic is relevant for RBI and NABARD with respect to the topics recent developments in the financial sector and corporate governance in banking sector. And the questions related to this have already been asked in the previous examination. So this is a very important topic with respect to examination. So Companies Amendment Act 2017 has recently hit the headlines. The act was notified on 3rd January 2018 and it was introduced to amend the Companies Act 2013. So the Parliament has passed this Companies Amendment Bill 2017 and the objective was to promote corporate governance standards and improve ease of doing business in the country, and at the same time take some strict actions against the companies which are defaulting, the companies which are not following the proper rules and regulations which have been laid out in the Companies Act. And under this act, more than 40 amendments have been made to the Companies Act 2013. So you can see quite a lot of things have been changed under this act. That makes it a very important one for examination. Now earlier government had also constituted a panel which was headed by Corporate Affairs Secretary Tapan Ray, and some suggestions were made in the Companies Act 2013 and some of these have also been incorporated in the Companies Amendment Act of 2017. So you can see here the journey of the Companies Amendment Act 2017. So the bill was introduced way back in March 2016, after which it was referred to the Lok Sabha Standing Committee and which finally gave a report which was subsequently finalized, and this bill was finally passed by Lok Sabha in July 2017, after which it was passed by Rajya Sabha in December 2017 and it became an act wide notification dated 3rd January 2018. So you can see the long journey it has passed since 2016 till 2018 to become an act. So first things first, let's look at some of the basics regarding the companies in India. Now first let us look at a basic definition of company. Now company is just a voluntary association of persons. So when few people come together and they have some common purpose in mind, they form a company. They may form a company and that company will be having a separate entity, a separate legal identity, a separate name, and its liabilities are going to be separate from the members or the shareholders, and its liabilities are going to be limited ones. The company will have perpetual existence. So company will go on and its existence will not depend on the life of the members who have formed the company. Members may come, members may go, company goes on forever. Now companies may be public company or private company. Now there may be some technical differences between both the two. The major difference lies in the fact that in public companies most of the shares are held by the general public and the shares are widely traded in the market and in the stock markets, and they are freely transferable from one person to another. While in the case of private companies, the shares are held by a close group of people and there are restrictions on the transfer of shares. Now with respect to the laws which have governed the companies in India, there have been several changes which have been made over the past more than 200 years. So you can see that first there was English Joint Stock Companies Act of 1844 which regulated the Indian companies, after which the Joint Stock Companies Act of 1857 and the Indian Companies Act 1913 was enacted. Now they continue to remain under the British era, and after independence this Indian Companies Act 1956 was enacted, which continued to serve us for a long time, after which it was completely overhauled in 2013 by the Indian Companies Act 2013. Now this Companies Act 2013 has been amended by the Companies Amendment Act of 2017. Now before moving forward, let us look at some of the key features of Companies Act 2013 which will help us understand the amendments which have been made in a much more easier way. Now this Companies Act of 2013 introduced the concept of one person company. So what happened was that earlier in private companies minimum of 2 persons, and in public companies minimum of 7 persons were required, and there was no concept of a single person forming a company. Now a separate 1 person company provision has been inserted in the Companies Act 2013. This act also talks about the responsibility of the corporates towards the society under corporate social responsibility. It also talks about the class action suits which can be initiated by a set of stakeholders like creditors against the company in case of any grievance. It talks about women empowerment. Some set of companies have to mandatorily appoint women directors. The focus has been laid down on e-governance. More work has to be completed online, and independent directors have to be appointed. Plus there have to be time-bound rehabilitation and liquidation process of the companies, which is a very important part of this act. Also there have been some restrictions on the auditors that they cannot perform non-audit services, and this has been done to ensure that there is no conflict of interest between their auditing function and the other functions of the company. So here we present a glance view of the Companies Amendment Act 2017, the key features under it. So under this Amendment Act of 2017, there have been some changes with respect to National Financial Reporting Authority, which is a very important authority under this act. There have been some changes with respect to what happens when the number of members goes beyond the minimum limit with respect to the public and private companies. It also talks about the timeline regarding the reservation of name by the companies and for how much time it is going to be valid. It also talks about the issue of shares at discount by the company and when it can be issued. It also talks about the framework regarding the insider trading, and some omissions have been made with respect to this framework. It also talks about the public deposits, that whenever a company accepts public deposit, it has to comply with some restrictions, some provisions. There have been some changes which have been made in the basic definitions under the Act. Also the focus have been laid down on the corporate social responsibility. Some technical changes have been made with respect to this topic. Let's start by looking at the changes which have been made in the definitions of the Companies Act 2013. So there have been some fine-tuning in the definitions of a cost accountant, debentures, these are kind of debt or loan for the company, holding company, key managerial personnel, which as the name suggests includes the director or the managers of the company, net worth, related parties of a company, turnover, which is the sales or the gross receipts of the company, associate company, and this have been done to bring more clarity in their definition and expand their scope. Also some change have been made with respect to the definition of the small companies. So now the government can prescribe a higher amount for companies getting classified under the small companies. So maximum prescribed paid up share capital has been increased to 10 crores and the turnover or the sales have been increased to 100 crores. So now companies with paid up share capital up to 10 crores and turnover up to 100 crores may be able to avail the benefits of being a small company if this limit is prescribed by the government. Now what happened was, Companies Act of 2013 did not provide that what will happen if the number of members, the number of minimum members which are required for forming a public company or a private company goes below the defined limit. So this limit is 7 for the public company, minimum 7 members are required to form a public company and minimum 2 are required in case of a private company. So under the new Amendment Act, this section 3A has been inserted, which provides that if the number of members falls below the statutory minimum, which is 2 and 7, and if the number falls below this limit, the members would be jointly, that is severally liable for the liabilities or the debt which the company has undertaken. So this is the major change. Now also there have been some changes with respect to the reduction of period with respect to the reservation of name of the company. What happens is that whenever you wish to form or incorporate a company, the interested persons first submit an application with ROC or Registrar of Companies to check whether their name is available and to reserve the same if it is available. Now under the new provisions, in case of incorporation, the name which has been reserved by the interested persons with the ROC shall only be valid for 20 days from the date of approval or such other period as may be prescribed. Earlier this was 60 days. So now the name is only going to be reserved and valid for 20 days and you have to incorporate a company thereafter. So this period has been reduced from 60 days to 20 days. Also, there have been some changes with respect to the registered office of a company. Now, registered office is the main office of any company in which all the communications which are to be made to the company are going to be sent by the different departments of the government. Now, what happened under the current provisions was that the company was to have a registered office from the 15th day of its incorporation. Now, under the new framework, company shall within 30 days of its incorporation have a registered office. So this 15-day period has been increased to 30 days. Also, there have been some changes with respect to private placement of shares. Now, private placement means when a company offers its shares or securities to some group of investors or individuals. It does not offer its securities to people at large, to public at large. Only few people are going to get the shares in a private placement. Now, there have been some changes which have been made with respect to the procedural aspect of private placement. Now, the return of the allotment under the private placement has to be filed within 15 days instead of 30 days earlier. The money which is received under the private placement shall not be utilized unless you file your return with ROC. Also, there shall not be any right of renunciation in the private placement offer. So you cannot renounce the right and provide this under the private placement offer letter. So there have been some procedural changes which have been made with respect to private placement. Next is with respect to issue of shares at discount. Now let's first understand what is issue of shares at discount. So whenever a company issues shares, the shares will be having some face value. Let's say it's 100. And if the shares are issued at rupees 120, which is above their face value, then it means the shares are issued at a premium. If they are issued at rupees 100, it means the shares are issued at par. And if they are issued at rupees 80, it means they are being issued at a discount. Now, the presently Companies Act provides that the company shall not issue shares at discount. So, company won't be able to issue shares at discount except in some specified cases. Now, under the Amendment Act of 2017, this relaxation is being provided to the companies whose debt is being converted into shares. The companies which are going to be restructured under some guidelines or regulations of RBI, and their debt is going to be restructured and converted into shares. So their shares will now be able to be issued at discount to the creditors. So this change has been made to provide effective resolution of the restructured companies. So this change has been made here. Now next is with respect to the acceptance of public deposits. Now a company under the Companies Act 2013 in general cannot accept public deposits, and some restrictions are there whenever it has to accept public deposits. Like it has to deposit some amount in the deposit repayment reserve account, and it has to fulfill some other requirements. So some changes have been made under the Companies Amendment Act 2017 with respect to the public deposits. Now a company has to keep minimum 20% of the deposits which are going to mature in the next financial year by the 30th day of April each year in separate deposit repayment reserve account. So earlier 15% was to be kept in this account. Now a higher amount, 20%, has to be kept in this account. Also, the provision which are linked to the deposit insurance has been omitted. Now the companies which have even defaulted in the repayment of deposits, if a period of 5 years has elapsed, they can also accept deposits. So this relaxation has also been given now. So this is the gist of changes which have been made with respect to acceptance of public deposits. Now another major feature of the Companies Amendment Act 2017 is with respect to the amendments made with respect to corporate social responsibility. Now corporate social responsibility simply denotes the responsibility of the companies towards their society. So each and every company is there, and it is for the benefit of society and overall social and economic upliftment of the country that it is there. Now what happened was, an eligibility criteria was defined that if a company comes under this criteria, it has to make a separate corporate social responsibility committee, and also it has to incur some expenditure towards corporate social responsibility. So only big companies were responsible for this. Now some changes have been made with respect to the eligibility criteria, and now the eligibility criteria will be calculated based on the figures in the immediately preceding financial year. Earlier this was to be calculated on the basis of 3 preceding financial year. So this change has been made with respect to the eligibility criteria. Now next is with respect to the prohibition of insider trading and forward dealing. Now insider trading is simply the act of trading of stocks or the shares of a company by the person who are having confidential information of the company. So if the directors of a company are engaging in some transactions with respect to selling or purchasing shares of the company, they are engaging in insider trading. Now bill seeks to remove the provision which prohibit insider trading in companies. So now this provision which used to prohibit insider trading has been omitted with the Companies Amendment Act 2017. Also, the forward dealing, which means that purchasing securities of a company at a future date, at a future price. Now Companies Act 2013 put a prohibition on directors and the key persons on indulging in forward dealing in the company's share. But this new Companies Amendment Act again removes this provision, this prohibition. So prohibition with respect to insider trading and forward dealing has been removed under the Companies Amendment Act 2017. A very important thing to remember. But here it is nothing, it is nowhere mentioned that now the insider trading and the forward dealing will be unregulated. They will continue to be regulated, but now they will be comprehensively governed by the regulations of SEBI and the SEBI Act. So this has to be remembered while we discuss the provision linked to the insider trading and the forward dealing. Now Companies Act of 2013 provided for establishing a National Financial Reporting Authority. Now it will be that authority which will oversee the functioning of the accountants and the auditors in the company. So it will take care that the financial reporting of the company is correct, and if it is not, the people which are involved, if there is any misconduct, it will impose fines and penalties on them. So now the minimum fines which were there have been reduced in respect of professional or other misconduct from 10 lakh to 5 lakh. So this fine has been reduced. Also it has been provided that any appeal against the order of this authority, that is NFRA, shall lie before National Company Law Appellate Tribunal. So if someone is aggrieved by the order passed by NFRA, she has to appeal to the National Company Law Appellate Tribunal. This has been provided. Now some procedural relaxations have also been made under the Companies Amendment Act 2017. It has been proposed that the annual general meeting, which is the general meeting of the company which has to be organized yearly by the company. Now this annual general meeting of an unlisted company may be held at anywhere in India. For this, consent has to be obtained by writing or in online mode of all the members in advance. So this relaxation has been given. Also it has been provided that the requirements with respect to MGT 9, which is nothing but extract of annual return. Now this annual return is a part of the report of the board of directors of the company. So this return was to be earlier included in that report. Now some changes have been made, and now only this copy of annual return shall be uploaded on the website of the company, and its link shall be disclosed in the board's report. So you do not have to include this entire annual report and MGT 9. You have to only give a link in the board's report. Also it has been provided that the CEO of a company, even if he is not a director of the company, can sign the financial statements of a company. So it is again a procedural relaxation which have been provided to the companies. Now let us also look at some of the miscellaneous provisions under the Companies Amendment Act 2017. Now there have been some changes in provisions with respect to the punishment for frauds. It has been provided that for serious frauds, prosecution will be there. Also the exhaustive definition which earlier used to exist with respect to Nidhi companies has been deleted. Now government will, by a notification in the official gazette, specify or declare a company to be a nidhi or a mutual benefit society. Now it has been provided that partnership firms and limited liability partnerships, which are another form of partnerships, may get themselves converted into private companies with just 2 or more partners. Earlier they were to have minimum 7 partners. Also there have been changes with respect to calculation of managerial remuneration, which is to be paid to the directors and the managers of the company. And some changes have also been made in the meaning of profits, which are to be used for distributing dividends by the company to the shareholders. Also, it has been provided that a person beyond the age of 70 years may be appointed as a managing director or a whole-time director or manager of a company, and this can be done even without passing a special resolution. Now there are some special types of resolution which are to be passed by a company if it wants to appoint a person beyond 70 years of age as managing director. Now this has been done away with, but you have to obtain central government approval. Now let us look at some of the MCQs related to the topic just covered. The Companies Amendment Bill 2017 is formulated based on the report of the Companies Law Committee, which was headed by, so this committee was headed by, options are Tapan Ray panel, Vijay Kelkar, PJ Nayak, Vinod Rai. So this we have already covered. The answer is option A. As per the Companies Amendment Act 2017, the name reserved by the ROC in case of incorporation shall be valid for dash days from the date of the approval. 20 days, 25 days, 30 days, 35 days. So this again we have covered. The answer is 20 days. The minimum statutory members in case of a public limited company, 5, 6, 7, 8. So this again has been covered by us. The answer is 7. Dash is a body proposed in the Companies Act 2013 for establishment and the enforcement of accounting and auditing standards and oversight of the work of auditors. National Fraud Reporting Agency, National Financial Reporting Authority, New Financial Reporting Authority, or none of the above. So this again has been covered. This is National Financial Reporting Authority, or NFRA. As per the Companies Amendment Act 2017, eligibility criteria for constituting this Corporate Social Responsibility Committee and incurring expenditure towards CSR is to be calculated based on, options are immediately preceding financial year, 2 immediately preceding financial year, 3 immediately preceding financial years, or none of the above. So this was covered by us that now this eligibility has to be calculated based on immediately preceding financial year. So answer would be A. So these are the answers to all the MCQs. So guys, this was all about Companies Amendment Act of 2017. Thank you.